Candlestick patterns are among the most essential concepts when trading for profit. Yet you'd be shocked how many traders still misuse candlestick patterns today. The hardest part about using them is figuring out which patterns really work, since there are countless ones out there. But here's the reality, most don't work. The truth is, 99% of patterns fail. I know because I've tested every single one throughout my entire trading journey. However, I discovered a few that perform exceptionally, and they still bring me profits today, and continue making me consistent gains. In this video, I'll uncover the 6 best patterns that are proven and reliable for traders, plus everything important about them. As a bonus, I'll show you how to combine these patterns with price action to discover high-probability trading setups. Also, I've prepared a free comprehensive guide, gathering all the top-performing patterns into one single, easy-to-use document. Inside, I include real examples of trades using these patterns and extra tips for enhancing your winning percentage. This guide can be your trading reference whenever you plan or execute trades. If you want a copy of it, you can grab it from my free Telegram community. The link is provided below in the description. Now, let's jump right into the video. So, what exactly are candlesticks? Candlesticks are a visual form of price history. Every candlestick reflects a movement of an asset's price during a set period. For instance, on the 1-hour chart, each candle shows price action in an hour. If you're viewing the daily chart, then each candle shows a day's worth of price. A frequent question by beginners is, why not just stick to line charts? Wouldn't line charts be easier for price? Actually, candlesticks offer much more data about the market than a line chart. And let me show you exactly why. Let's take a simple comparison example. Let's examine the euro-dollar pair here. On the left is a standard line chart. On the right, we have a candlestick chart. Both charts resemble each other in movement, because they both display the same price flow. However, notice a significant difference. The line chart shows only one point, specifically the closing price per time frame, whereas the candlestick provides far more. It gives 4 different pieces of information for the exact same period of time. First, the opening price value, which indicates where the price started. Next, we have the highest price reached, which shows maximum bullish strength. Then, the lowest price traded in period. Finally, the closing price after action ends. Only the closing price appears in lines, and so we miss crucial data points. To clarify it better, let's compare visually. Look closely at this side-by-side view. The line chart gives one thing, while candlesticks show richer information. Here's why extra data is important. Line charts simply summarize closing points and miss details traders often need. Meanwhile, candlesticks reveal market showing behavior, buyers and sellers' strength clashes. This extra context changes everything. Now, why does this matter so much? These extra details help traders greatly. They allow smarter trading decisions overall. Suppose price touches a support level, and we notice a bounce happening. With line charts, we see simple movement. But with candlesticks, we see depth. For example, price could have wicked down below the support briefly before bouncing. A line chart would hide this. This kind of information is invaluable for traders analyzing pure price action, because it hints where price could move. There are 2 primary types of candles, green candles and red candles. A green candle closes higher than it opens, showing that buyers dominated that session. Conversely, a red candle closes lower, indicating sellers overpowered the buyers. Each candlestick consists of 2 parts, the wick and the body. The wick shows price extremes reached, while the body shows the open and close, depending on the candle's color movement, showing buyers had more control over sellers. On the flip side, a red candle forms when the price closes below where it initially opened, signifying stronger selling pressure and over weaker dominance by the buyers. Each candlestick has 2 components, the wicks, also called shadows, and the body. The end of the top wick indicates the highest point reached within the candle's trading period. Similarly, the lower wick's end marks the lowest price level reached during that same time window. When it comes to the candle's body, things differ slightly between colors. For green candles, the body's bottom represents the opening price for that time, and the top represents the closing price. Meanwhile, with red candles it's reversed, where the top shows where the candle opened, and the bottom of the body shows its closing point. When scanning a chart, you'll spot candlestick variations. Some candles have big bodies, some small, while others feature long wicks or short shadows. Different candle shapes tell us unique stories about the ongoing fight between buyers and sellers. Understanding their meanings is vital for traders focusing on price action strategies, allowing deeper market insights and improving trade decision accuracy. The first key distinction is the size of the candlestick body. Large bodies reveal powerful market momentum, while small bodies imply hesitation between buying and selling forces. Imagine a big-bodied green candle appearing. It suggests overwhelming buying activity occurred. Price opened lower but surged higher, with little resistance from opposing sellers, confirming aggressive buyer dominance clearly. This causes the large bullish candle that closes far from the opening price. Now consider a big-bodied red candle. This indicates strong selling pressure instead. Price opened high but dropped sharply lower, reflecting seller dominance with minimal buying opposition, leading to a sharp downward move and a large bearish candlestick forming. Candles with small bodies tell a different story. Take a small green candle. Buyers were stronger, but just barely. Sellers still showed heavy resistance, causing the price to struggle rising, resulting in a tiny bullish body forming. Similarly, small red bodies reflect the opposite. Sellers had the upper hand, barely, but buyers heavily resisted downward so movement. The price didn't fall too far, leading to a candle with a short body. Next up are candlesticks with large wicks. Long wicks tell us valuable price stories and deeper market momentum insights. For instance, a candle with a lower wick indicates strong buying pressure. Price moved sharply lower first, but bulls regained control before closing, forming a visible rejection wick below, suggesting strong support entered the market. On the flip side, a long upper wick shows sellers rejected higher price levels. Price pushed up initially but failed, ending much lower before closing time, creating a long top wick showing resistance. Thirdly, candles with small bodies and even wicks suggest a balanced battle ongoing between buyers and sellers. Neither side showed significant control or dominance, causing price to open and close closely, often forming a candle resembling indecision. If the candle closes slightly green, buyers had a minor advantage, but overall control was shared equally by both market sides. Understanding body and wick formation is crucial for mastering candlestick reading, especially when interpreting basic candlestick patterns. Now, let's move on to the major setups, starting with the 6 candlestick patterns I trust and rely on heavily. First is the engulfing pattern. Engulfing patterns involve 2 different candles, the second fully engulfing the first. The key point to notice is that the second candle's body covers entirely the previous candle's entire body space. There are 2 types, bullish engulfings and bearish engulfings. Bullish ones happen when a red candle is completely engulfed by a bigger green. The bullish engulfing shows buyers taking control fast. Conversely, bearish engulfing involves a small green candle followed by large red, suggests sellers have overwhelmed buyer strength. Spotting engulfing patterns may hint trend reversals. If you find one after a downtrend and it's bullish, price could rise. This pattern signals strong buyer activity re-entering markets, causing a trend change likely upward because the second green candle dominates powerfully. The bigger the green candle, the better, as it shows even more buyer strength. When trading engulfing formations, it's smart to seek additional confirmation, which we'll cover further ahead. But sometimes just the engulfing pattern alone provides enough trading confirmation. You can enter right after the green engulfing candle closes strongly. Place your stop loss at its bottom wick to allow the trade room to develop. Apply the exact opposite logic for bearish engulfing. If a bearish engulfing appears during an uptrend, it hints at potential downward reversal, showing sellers gaining overwhelming control. In that case, you can enter short after the large red candle confirms, with stop loss placed above its top wick. That covers the engulfing pattern completely. Next is the pin bar candlestick pattern. The pin bar is formed by a single candle, featuring a long wick and tiny body. 2 versions exist, bullish and bearish. A bullish pin bar has a lower wick and signals heavy buyer rejection downward. A bearish pin bar shows sellers rejecting higher prices with an upper shadow. When a pin bar shows up on charts, it often warns of upcoming reversal signs. Buyers regain control from initial seller pressure, pushing price higher by candle close. Some aggressive traders enter immediately upon spotting a bullish pin bar formation, but I prefer waiting for confirmation first, via a second green confirmation candle, before committing to a buy entry. You enter the trade after confirmation and place stop loss below the pin bar. The same idea applies to bearish pins. Wait for a red confirmation candle too, before initiating a sell trade entry, with stop loss positioned above the pin. Moving on now to the third pattern, the 3-bar continuation pattern setup. This formation requires 3 candles sequentially. Each candle plays a specific role. The first candle is strong, a large body much bigger than normal. The second candle is opposite colored and small, ideally no larger than half the first. The third candle reaffirms initial momentum, closing above the second candle's high. There are bullish and bearish versions. For bullish, the first and third are green, with a small red retracement candle between. For bearish, the colors are reversed. Strong red candles surround a small green. Spotting 3-bar continuation signals trend strength, allowing for great continuation trade entries in the dominant market direction. For example, in an uptrend, a bullish 3-bar pattern hints price may continue climbing, offering a strong buy opportunity, with stop loss under the second candle's low. The same goes for bearish continuation. They signal ongoing downward trend strength, giving ideal short entry setups and stop loss above the second candle's high. Now moving to the fourth setup, called the 3-bar reversal pattern. This involves 3 specific showing candles, a strong potential trend reversal. The first candle has a large full body. The second candle is smaller, but matches the first one's color. The third candle flips color powerfully and has a full body as well. The third candle's size matters greatly. The bigger it is compared to the first, the stronger the reversal potential appears. 2 versions exist, bullish and bearish reversals. Bullish reversals start with 2 reds, then flip green strongly upward. Bearish reversals start with 2 greens, then flip red aggressively downward. This pattern often signals a sharp reversal, providing prime entry points for trades, setting stop loss at prior candle extremes, and capturing new trend movements early. That wraps up the first 4 setups. Let's now discuss the 5th setup, the inside bar candlestick pattern. An inside bar happens when the entire candle fits within the previous candle's range. Both the high and low points stay completely inside the prior candle. This formation signals indecision or consolidation forming. The market pauses before making a decision to break up or down. Inside bars often appear before strong moves, known as breakout opportunities later. Think of an inside bar as pressure building before the market explodes in one direction. There are 2 ways to trade it. One method is waiting for a breakout, above or below the mother bar, and entering after breakout confirmation. The mother bar is the first candle, enclosing the smaller inside candle. The second method is preemptive entry, anticipating the breakout direction early. But this requires advanced skill and practice, because it involves greater market experience. Breakout trades usually have excellent reward to risk when managed properly with discipline. Now we reach the 6th and final candlestick setup on today's essential list. It's called the fakey pattern setup. The fakey pattern involves a false break, where price initially breaks outside a range, but quickly reverses and moves opposite direction, causing trapped traders on wrong sides, which leads to explosive movements. The structure starts with an inside bar, followed by a false breakout attempt. Then a strong rejection candle appears, pushing price opposite the breakout. The key element is false break, where early breakout traders get trapped and forced to exit their positions, fueling even bigger price movement. Fakey patterns create excellent trading opportunities due to trapped trader fuel effect and quick explosive moves. Once the false breakout is confirmed, you can enter on the reversal with stop loss behind the fake breakout, allowing trade room for volatility breathing. To summarize, these 6 candlestick setups, engulfings, pin bars, continuation patterns, reversal patterns, inside bars, and are reliable when used correctly and can greatly improve your trading. But proper context matters massively. Blindly trading them without context leads nowhere. You must always read overall price action before committing to pattern entries. We'll cover this in the next section, where I teach combining price action with candlestick patterns for stronger results. Let's move into that now. Many traders make a huge mistake. They treat candlestick patterns as signals, without considering broader market context. This leads to poor results. since no pattern works every time outside proper trading conditions. Smart traders ask critical questions first, like, what is the trend direction? Or, where are major support levels? These questions create smart filters, boosting your pattern setup success rates. Patterns should align with context, not oppose larger market conditions. Here's how you apply this easily. First, identify the market trend. Using simple price structure analysis, look for higher highs in uptrends and lower lows in downtrends. Never fight the dominant market direction. Even if a pattern suggests otherwise, trend alignment greatly increases odds. Second, map major support zones and resistance areas on your charts. Strong areas act as reversal magnets, providing excellent pattern entry location. Lastly, monitor price reaction behavior upon approaching key market zones. Is price rejecting or breaking? Combine this with your patterns. For laser-focused trade setups, trading without context is gambling. Trading with context becomes professional. Now you know the difference. Congratulations on learning all these principles. If you found this guide valuable, please smash the like button. It helps support my free content and lets me keep helping you. Subscribe for more trading tutorials and turn on the notification bell so you never miss new videos. Also, leave a comment below, letting me know your thoughts. I read every single comment and appreciate all your feedback. If you want to dive deeper, download my free Candlestick cheat sheet. It's packed with detailed strategies to help improve your trading. You'll find the link below, inside the video description section. Inside, I've included everything, from pattern examples to entry tips, plus extra bonus trading insights to fast-track your trading skills. It's completely free to access, so take advantage of it. Thanks again for watching today. I'll see you inside the next video. Until then, happy trading everyone, and stay safe out there. Goodbye for now. Take care and good luck. We'll connect again very soon with more powerful strategies. Don't forget to practice wisely and trade with discipline always. That's how consistent profits come. Step by step, day by day. Stay patient and stay focused. Success will eventually follow you. Believe in your journey always, and never stop improving yourself. That's the real secret here. Keep growing every single day. Small steps create big wins. Thanks again and goodbye. I appreciate all of you. Let's conquer the markets together. Stay disciplined and stay winning. And I'll catch you soon. Stay awesome out there, traders. Until next time, trade strong and protect your capital first. Money management is everything. Never forget that key point. Trading smart beats trading often. Pick only the best opportunities and ignore the random noise. Patience separates winners from losers, so stay patient and persistent. You'll reach your goals faster. Keep showing up every day. Consistency beats random bursts. It's all about long-term discipline. Focus on improving yourself daily, and success will chase you. Success is a marathon, not sprint, so take your time wisely. Build real skills and mastery, and everything else will follow. Never rush your growth journey. Growth happens quietly and steadily. Stay focused on small wins, and you'll build massive success. One step at a time. One trade at a time. Your dreams are absolutely possible if you keep believing every day. Persistence beats talent without work. So keep working consistently hard. You're much closer than you think. Success loves the persistent ones, and you're definitely on track. Keep moving forward strong. Thanks for being part of this, and for supporting this channel. I truly appreciate everyone. Stay tuned for much more. Great content is coming soon. We're just getting started. This journey will be amazing. Thanks again, and goodbye friends. Wishing you endless success ahead. Take care and keep winning. Victory is waiting for you. Stay strong and keep focused. Your hard work will pay off. Stay inspired and never quit. Dreams come true with action. Make today count, every day. Go chase your biggest dreams. The future belongs to you. Believe it, achieve it. You have everything you need. Thank you for your support. And I'll see you soon. Take care and happy trading. Goodbye and best wishes. Keep pushing forward, no matter what. Success rewards the persistent heart. Stay determined, stay strong always. You're destined for great things. Have faith in your abilities. Your time is coming soon. Never give up on yourself. You're stronger than you realize. Trust the process completely. Progress is happening every day. Even small steps matter deeply. Tiny wins create massive victories. Keep stacking those wins daily. Success is built through habits, not just occasional big moments. Develop daily winning habits, and watch your life transform. Transformation starts from within you. You are the architect here. Build wisely, live amazingly. You hold the pen truly. Write your success story proudly. Nothing can stop you anymore, except you giving up early. So stay resilient and powerful. Strength lives inside perseverance. Courage grows through facing challenges. The more you grow, the better. Growth is never comfortable, remember, but it's always worth it. Keep fighting for your dreams. You are much closer now. Closer than you even think. Stay the course, stay committed. You will reach greatness surely. Because greatness is inside you, waiting to be unleashed today. Unlock your full potential now. The world needs your brilliance. You are meant for more. Much more than you imagine. Step into your power boldly. And inspire everyone around you. You have incredible greatness inside. Ready to shine bright now. Believe, act, and succeed massively. Your moment is arriving soon. Get ready to celebrate victories. Victory is your natural destiny. Keep chasing excellence passionately. Excellence defines true success. Strive for mastery daily. Mastery will change your life. This is your true journey toward unlocking your best version. Keep moving, keep evolving. Evolution creates endless opportunities. Opportunities will keep finding you, because you are ready now. Ready for greatness ahead. Nothing can stop you anymore. Stay blessed and unstoppable. You're a champion truly. Keep your fire burning strong. Success loves unstoppable spirits. Be bold, be fierce. Great things await you. Thank you again, dear friends. You all inspire me deeply. Stay blessed and empowered always. And I'll see you soon. Goodbye and happy journeys. Wishing you massive success ahead. Take care and much love. Signing off with gratitude. An unstoppable motivation for you. Goodbye everyone and keep winning. Until we meet again soon. Stay awesome and legendary. And keep chasing greatness daily. Never settle for anything less. Because you truly deserve greatness. Take charge of your destiny. And leave your mark proudly. See you at the top. Goodbye, champions and legends. You've got this, believe it. Much love to all of you. And until next time, goodbye. Stay winning and stay strong. You're truly amazing people. Goodbye and best wishes forever. Thanks again. Goodbye my friends. Much love and respect always. Goodbye and happy trading journeys.